Hi, welcome. I'm Jessie Walters from Charles Rutenberg. I'm here today with DeLynn Gaston from the mortgage firm. Thanks for joining me.
Thanks for having me.
Yeah, we have lots of questions and just different, we have a list of just different financing and different options and stuff like that that's out there. Because a lot of people right now, I think, are, fretting about what's going on in the economy, and they have all these new, basically assistance and stuff to help people still get into homes.
Yes.
It's still going to be better than renting, putting that money into a home.
Oh my gosh, I know. Rents are still so high.
Yeah.
Right?
Right.
You
Yeah.
probably know more than me. Rents are still outrageous
Crazy.
out there.
Yeah. And there's still a shortage on the rentals too. So it's
Oh,
still,
there is?
Mm-hmm. So like when you
Even with all of these investors and these big companies that have been buying up all these properties.
They did it and they just put them out more expensive. So they're out there.
So they're trying to flip them instead of rent them.
Well, both. They're putting them out at the highest rents possible, and they're also flipping them too. I just saw one. I don't know if I can mention the name, but they had bought the house for
Sure, we can.
Yeah. Open, say open roof instead of what it is, right?
Right.
So they had bought the house for $265. They have it listed for $315. And when you do all the stuff backwards, how much is this big company making, on flipping? So now they reduced it to $310, and it's like, and so I was doing the, last week we were talking about, how to list a property and how to pinpoint that price and stuff. And it was just basically down to list it what it's going to appraise for. Don't list it at your dream price. And I think that's what a lot of, 2022 was. Yeah, my house is worth this much more because it's my house. You know what I mean?
Right.
My stuff's better than your stuff.
I know.
So that's pretty much how everybody is. You're going to sell a car.
Next door neighbor's overpriced. Yeah. Me, I'm perfect.
Yeah, exactly. Yeah, it's their fault. They're ruining the prices for the neighborhood. Yeah. So I feel like now everybody, when they say leveling out, I feel like it's mentally everybody leveling out because everybody's like,
yes.
You know what I mean? It's because they say, it's a seller's market. It's a seller's market. Sellers can do whatever they want. So
do you see that? Look, now I'm asking questions. Yeah. I haven't seen you in a while, right? Have you seen the sellers finally coming to terms with their house is not the Taj Mahal?
Yeah, exactly.
Well, and it's not worth like $1 million too.
Exactly. So sometimes when I price them, I'm like, do you have 14 karat gold faucets or something that I don't know about? But it depends on like how good their sense of humor is too, because you don't want to insult somebody.
Right.
But like I was saying before, if the whole neighborhood, if you live in a neighborhood, like I always say, cookie cutter, not to insult people, but if there's a lot of houses exactly the same, and yours is...
I call them chiclet houses, because if you look at an aerial photo, they look like a bunch of chiclets lined up.
Yeah, that's true. I never thought of that. Now it's going to ruin that whole aerial shot for me. Chiclet
houses.
But so like if you're pricing your house and they're all 500, 500, 500, and you're like, no, and this is what people were doing. If I sell it, I sell it. I want 6. If I sell it, I sell it. I want 550. Well, now you're not going to sell it. You're going to sit on it till you kind of even out with everybody else. So It's kind of like the dream, my dream prices, I've had people say, well, I live in this neighborhood. I don't really want to sell, but if I sold it for $1 million, I'd sell. And your house is worth $685, So they'll say, can you list it? And I'll say, I kind of, it's like that double-edged sword, because then you get the calls from the other realtors like, where'd you come up with that price, And I'm like, my customer told me, But so we're not having that as much anymore. So I think people are getting realistic pricing based on like appraisals and, and actual comps of solds, not for sale. Because I always say to people too, you can list your house for $1 million doesn't mean it's worth $1 million,
right.
So it can't be a comparable. Only your solds are comparables, But I've had them where I've seen them under contract, and I'll call them up and say, hey, how close are we? Because I have the same exact one. How close are we on our prices? We're going to list it for this, because you're not allowed to disclose that sold price, but you can call those pending sales and say, when you're pricing it too, because if you've gone through inspections and appraisals, you're good, at that point.
Yep. So and that's good with you guys working together like that, because it makes life so much easier for everyone. And I think for a while there, things were just
very
too chaotic.
competitive with the realtors too. We had a lot of
brand new people just jumping in. This is their first sale.
Yeah, and a lot of people. Well, you had the people. so you had the young, say the young or the new people who were insulted by the old people because the old people would say, well, I've been doing this for 15 years. And then you had the opposite going too, where they were insulted because they'd say, well, I've been doing this 2 years. You know what I mean? So they have this big, everybody was in competition with each other and stuff. And it's just like, it's just like mortgages. There's enough for everybody. Nobody needs to fight and to degrade each other.
And it's better if you work together on things because, again, so if you, and this is what I try to tell people sometimes, when I have a client that's pre-approved, one of your people that's pre-approved, I'm going to say to you, before you write the offer, let me know, or when you're writing the offer, let me know who the listing agent is because I'm going to call them. And I'm going to say to them, hey, I just wanted to introduce myself. We got an offer coming in. It's Jessie Walters, and I got to tell you, first of all, she is top notch. She is not brand new. She's, and they all go, oh, thank God.
Yeah.
Like right away, because they wanted to. I said, she's seasoned. She knows her stuff. She's right on top of things. So you don't have that to worry about. Second thing is I'm local and blah, blah. So, but I always do that right away because aren't you more, if you're a listing agent, aren't you more inclined to take an offer from a realtor either who you've worked with in the past?
You have no surprises.
Rather than, exactly.
So I had that one.
Or encourage your seller to take, I should say.
So like when it comes down to it, you can't say, well, like if you have a seller, you can't say, well, this realtor is brand new, but they brought this brilliant offer. I usually say they're brand new and I will hold their hand every step of the way to make this happen for everybody. And then I get it's like I'm in training, I'm training someone.
I know.
And I look at their picture and like I say, they're so cute. And that's probably why they, they got hired and they're so sweet, and I'm doing all their work for both sides and I don't care as long as we make it happen. And then they go, I can't wait to work with you again. And I'm like, oh, great.
Yeah, I know.
Not real soon. I don't have enough time, But yeah, so it's an interesting balance now, I think. But a lot of,
it's nice to see it come back a little bit in line.
Yeah, because we were going and going and going and competing and competing and competing. Yeah. And now it's like you have enough, time to go. It's like almost back to normal. Like we had 30-day, on market 30 days to 90 days, and that was a norm. So now, and it sounds horrible, but a lot of the new realtors are like, well, we're 13 days on the market. What's going on? Why isn't this sold? And you're like, well, this is like old school again. You know what I mean?
This is normal.
Yeah. This is what the norm was.
Welcome to normal.
Yeah. It's going to take a while. Yeah. So like I always say, you work, and as commission-based sales, you work months prior to, so I may have ones under contract now, I do, and then, but I don't count that. I'm working for the next, I'm still working those home inspections, all that stuff. But you're working to the next.
Absolutely.
Yeah. And mortgage, same thing.
Same thing.
Yeah. So it's just part of the show. If you want to, be in the rat race that we're in, that competitive field, then you have to kind of think forward and be forward thinking and be positive too. So
do you find it's a little bit more of a breather now because you don't have to put an offer in within 5 minutes of seeing the house?
Yeah, because I did during that time, automatically, if I have a buyer who wants that, I still will send a message immediately. We're sending an offer, and and they're like, okay, calm down. Yeah, so it's gonna, because I'm used to you have 2 hours.
Oh gosh, here comes a wacky.
Yeah. I know, and on some of these they still have the timelines for the bids. It's kind of like like HUD. So HUD Homes will have that 8 o'clock or 6 o'clock to put that bid in, and then daily. Yep. So does Open Door. Some of those bigger firms, so they're computerized and stuff. So you have that till 8 o'clock. So I was so used to just running and having to put that offer in so quick that I was like, we have till 8 o'clock. I had it all ready to go, and and then they go, well, if you don't get in today, then tomorrow you have till 8 o'clock. What I mean? So I guess I'm freaking out.
Okay.
Yeah. Shoo. Yeah. Are there any offers? No. Oh, good. Okay. I'm not used to this, but I had to come down, and everything's mellowed out a lot.
That's nice. It's nice because now we have people, our first-time home buyers and things like that, who are starting to come back into the market because they got so discouraged. They went and signed another lease.
Yeah, exactly.
So, but it's okay. So, it's taken a year to kind of work through all of that. So now their lease is coming up in December or whatever it might be.
True.
And they're I'm seeing, FHA offers get accepted, VA offers get accepted. Even I'm seeing concessions.
Yeah.
Seller concessions are coming back back
Yeah,
again.
closing
People
costs.
totally freak out
Yeah.
with closing costs, right? So there are, oh, and that reminds me of another thing I got to tell you about. I don't even have it on my little list.
Okay, what is that? What? Tell me, I need it.
I don't know if I told you about it or not. Buy downs?
Oh, no,
We
no.
talked about buy, okay.
I think we had talked about it may start up seeing more popular again. Well, I think it's always been here, but
Yeah, it's always been here, but nobody,
yeah,
when your rates are at like, 3.
Yeah. What are you going to buy
What do you
now?
buy down to 1?
It's free.
Yeah, exactly.
Here's your house. Everything else is free,
So some of the ways sometimes, and this works really well for people who are listing agents, and the house is sitting perhaps, and instead of lowering the price, talk to your seller and say, instead of lowering it $10,000 or whatever you were going to lower it, why don't we offer to buy down the interest rate for the buyer?
Oh, yeah.
Because if you lower the price 10 grand, that helps the buyer like maybe $50 a month in his payment.
Yeah.
But if you offer to buy his rate down with that same 10 grand, that could save him in a monthly payment $250
Oh, wow.
a month.
Yeah.
That's big,
Yeah.
That's going to make a big difference to a buyer, and that's going to make, again, if before you lower the price, to
Right.
try and attract people, do something like that first, because that's going to be very attractive to a buyer. So I don't know how much you can put in those, MLS notes, but I would like
You could
start the
definitely put it in
line, the
realtor
sentence
section.
with that. Yeah.
Definitely.
Yeah.
And then put the contact information for the mortgage person that, you know what I mean? You could do that.
Yeah.
Definitely there. So when rates were 3% or 3.5% or 4%, and people would ask, about doing the buy downs, I was always like, how long are you going to live there too? So
Right.
if you're personally going to buy down your own interest rate, make sure you're planning to live there.
Right.
Like 10 years, I think it was the average when we were kind of doing, because if you're
Doing
going to
the
live there
math.
2 years,
Right.
why buy down the interest
Right,
rate?
depending on how much it's going to cost
Yeah.
you, and what buy downs are, so that your audience out there knows.
Mm-hmm.
So it's paying points. So you pay points and you buy down the interest rate. Now in this fluctuating market that we have right now, for the most part, everything is costing points anyway.
Right.
Because there's not a lot of what's called par rates out there, because the investors are they're just as kind of antsy about what's going on with the market as well. So, but that's what you do, is you would pay extra points to buy them down. What is a point? 1 point is 1% of the loan amount. So if you have a $300,000 loan, 1 point is $3,000. 2 points is $6,000 over and above your other closing costs, and that's how you buy down your rate. That's why I say, let's get the seller to do that if possible. Again,
Yeah.
only if they were going to lower their price anyway. I'm
Right,
not telling
right.
them that they have to. I'm just saying
Yeah.
that that's a very nice option for
Yeah,
buyers.
it is. Yeah, so like you were saying, you're seeing I'm seeing closing costs paid by seller concessions. So if you're getting a loan, you have to come to the table with 17, 20, you know what I mean?
Right,
Then you
exactly.
can ask your seller to include, I think it's a misconception for my poor buyers, because they'll say, well, it doesn't affect them, but if they're giving you closing costs, it's coming out of their proceeds.
net, yeah.
So if they're selling the house for $500 and they're giving you $6,000 closing costs, they're getting $494 instead of
Right.
$500. You know what I mean?
Yes.
So because I don't know, I think they feel like it just comes out magically out of the, you know what I mean? Where is it the
I
closing
know,
costs? Yeah.
they have no idea.
Yeah, they're
I
like,
know.
why don't they give me more, And then there's limits on how much they can give, stuff like that.
Yes,
but,
there is.
But that's good, yeah. Closing costs, and then I've seen, for incentives right now, I've seen if you close this deal within 30 days, bonuses. I've seen closing costs, I've seen bonuses, I've seen home warranties. All these are things that we haven't seen in years.
Right? Yes, they're all
Yeah.
coming back now,
Yeah.
which is so encouraging.
Yeah, for
because
buyers, yeah.
Yeah, because closing costs really, they are a lot of money, and people
Yeah.
don't realize that. I mean, some of them, they're struggling just to come up with like the $15,000 down payment or whatever
Right.
it might be. And then on top of that, we need another
Yeah.
$8,000 or whatever for your closing costs and your insurance on the
Yeah, I
house.
was gonna say.
Because insurance has gone up
Yeah,
lately.
insurance
It's
gone up a lot.
double,
Yeah.
practically. practically. So there are so many costs that people, they don't realize. And unfortunately, I walk them right through it when I get them on the phone for the first time. Not that I'm trying to scare them away, but I want them walking into the transaction eyes
knowing
wide
what they're-
open.
yeah.
You don't want to waste your time with somebody who's not going to be able to do
I
it.
just had one. This beautiful home. It's on in Beacon Woods. It's listed for sale. It's on Stagecoach, and I'll throw the addresses up if I have them. I don't know if I have the pictures and stuff, but I'll try to throw those up on the next set. But this house is beautiful, and I called for my follow-up call with the buyer's agent, and I said, "Hey, how'd your buyers like the house?" They said, "Oh, they loved it. It's beautiful, but now the interest rates just went up, so they're not qualified anymore."
Buy down.
Oh, yeah, it's true.
And there's another kind of buy down too. So there's the 30-year buy down. I know we probably have to go to break pretty soon. There's the where you're buying the interest rate down, for the long term. But there's also a short-term buy down where you're buying it down just for 2 years. So for example, let's say the interest rate is at 6 today, right? You can buy it down to 4. So we qualify them based upon the 4% interest rate.
That's good.
This is perfect for like first-time home buyers because
Yeah.
their income's going to be going up because they're usually young, they're millennials or whatever,
Right.
20s, 30s, and they're just starting their careers and they're going to
Right.
be getting increased income. So it's 4 for the first year. Then it goes to 5 for the second year, so it just goes up a little bit, and then it goes to 6 for the third and through 30th year.
Oh,
So
okay.
it kind of gives them a little
Like
bit
a
of a
ARM and adjustable rate mortgage in a way, but
with
it's
with a
fixed.
2% cap.
Yeah, that's
it's
good.
fixed. It
That's
is.
good.
It is. That's a really good one too.
Yeah. Yeah, 'cause so then
so
maybe
maybe
it'd make
that'll
it
work
more
for talk to your
affordable.
seller.
I know.
Exactly. Maybe he's willing to do something like that
'Cause
for them.
we had reduced from 365 to 359 on this home. It's a 4-bedroom. It's all been redone. It's
Oh, wow.
Yeah, it's really, really. It's not marble, granite countertops and stainless steel and the wood laminate, and it's a beautiful home. So I'm like, why? It's got to go soon. If I can just
Yeah.
get people's
And
eyes on it.
people are always looking for 4 bedrooms. Those are hard to find.
Yeah, exactly. And I'm always like, if I can just get the person out there, they'll buy it. So we had it, and then it's like, they were like, well, we can't afford it anymore. So I'll go into that more
So
and
they're
see
at
if
the
we can do
tippy
points.
top.
Yeah.
Or maybe you can do FHA. They allow a higher debt ratio or something.
Yeah, true.
Let me talk to these people.
You're like, where are they at?
people.
We're doing this. You can't have their number right now. She runs off the side. I got to know where they are. Yeah, because I was like, well, this was the buyer's agent. So I was like, how's the feedback? How's the feedback? No response. How's the feedback? How's the feedback? Oh, they think it's beautiful. They love it. How's the feed? Where's my contract? Where's my contract? But yeah, they're like, sorry, so I'm like, darn it. But,
But maybe it's salvageable, really,
yeah. And a lot of the realtors that watch this and stuff, I tease them, but you guys only need one buyer and one seller. You know what I mean?
Yeah.
So you don't need 30 bids. I mean, it's nice when we have 30 bids, but we only need one actual,
You're right.
buyer and one actual seller. So if you don't have the seller and you have the buyer, you only just need one home. So, because people get frustrated and they're like, well, it's, the market's changed, everything's different. But that's like my pep talk for today. Stay positive. You only need one and one.
That's right.
But you guys stay tuned just for a sec. We're going to talk about just different types of financing. So stay tight and we'll be right back. Welcome back. I'm Jessie Walters with Charles Rutenberg, and today DeLynn Gaston is here from the mortgage firm, and we're talking about just basically we're complaining about interest rates, but we're talking about different programs.
And we're grateful for the market settling down.
Yeah, in a way, my sellers aren't grateful, but
I know. But the rest of us are.
Yeah, because we're not running. We're just,
you poor guys can breathe.
I know. It is nuts. But so we were talking about different programs, and we had talked on break, lock and shop. That's new.
That's new. Yes,
Yeah,
yes,
what's
yes.
that?
So, okay, so here's what Lock and Shop is all about. So most of the time, if you're talking to your lender, you with the rising rate environment, since January, rates have doubled.
Yeah, exactly.
We were in the 2s and 3s then, and now we are well into the 6s right now on interest rates. Obviously, interest rates, there's a lot of factors that go into it. Like two people don't get the same interest rate, and pretty much unless their factors are the same. It all depends on your credit score, but that's not the only thing. How much are you putting down? 5%, 10%, 20%, 30%, 40%. Obviously, the more down payment, the better your interest rate's going to be. So somebody
Your
putting
debt
5%
ratio, too,
down.
right? Debt ratio and
Right. Somebody
that.
putting a tiny down payment is not going to have the same interest rate as somebody who
Yeah.
put, 40% down.
Right.
Or 50% down.
'Cause
So
you're
anyway, so there's a
invested.
whole bunch of factors that go into it. But with the rising rate environment, so normally you don't lock your interest rate until you actually have a house. When you're in contract on a house and you've applied for your mortgage, that's when we lock your interest rate. However, there's a new thing out, and it's called Lock and Shop. What the Lock and Shop does is lets you lock the rate right now, and what we do is we lock it for 90 days. Gives you 45 days to find that house. So hopefully you've been looking and you're kind of narrowing down your search because things aren't going like that anymore.
Right.
So you've narrowed down your search a little bit, and you have to be in contract within 45 days, and then that gives you 45 days to close the loan. Most loans will take anywhere between 30 to 45 days anyway, depending upon the complexity.
Right.
But for the most part, so that gives you your 90 days. So, and then you're locked in. What happens is if the interest rate before closing actually does come down, usually about a week before closing, we have to get all the
down.
numbers.
Yeah.
If it comes down, we can do a one-time float down, it's called.
Oh,
so
that's
let's say
good.
the interest rates, we're starting at like, I don't know, 6.5 or something. And let's say they come down to, 5 3/4 or whatever. Perfect. We can float you down.
Because we've seen them all dropping. No. But you're going to have that one customer who's going to actually say, what if they go down? I'm like, I don't think that's, but that covers
but
you.
But what happens,
you.
what happens, the news will tell
Yeah.
people, oh, interest rates had a drop today. Well, the news is like, 4 days behind, what the markets are doing.
I get so frustrated with the news only because, Florida's a different, like I try to tell people here watching the show too, Florida is a different, just totally different. Like we're still wearing shorts, they're getting jackets. You know what I mean? Like
we wear white after Labor Day. We don't care.
Yeah, she's got white on right now. She's a rebel. But we also have this continuous, like people want to, they want to live where or we live where they vacation. They want to come move here. They want to retire here. They want to play golf here.
Yes.
They want to vacation. They want to, you know what I mean? All these different things that come in with Florida. So we're still, we're still getting buyers, and then people in other states are like, we're dead in the water, nothing.
Right.
But we still have retirees. We still have people that are sick of the cold weather, that
Yep.
are sick of
Moving
different things
down.
up north. Yeah, and they want to
know.
move to Florida. So
My niece said to me one day, she said, she's from Connecticut, by the way, what do Florida people do when they retire?
yeah, nothing. Yeah, you have to
Where do you
give a pair
move
of
to?
flip-flops. Yeah, that's true.
Because they all moved to Florida.
Yeah, that's true.
I said,
I
I'm
never
going
thought
to
of
an
that.
island.
Yeah.
That's what I'm going to do.
Somewhere no one can find me.
That's right.
I know one of my friends like, I'm going to go to Hawaii. I'm I'm like, have you looked at the houses on Hawaii?
And the cost of living in Hawaii.
And then okay, so Florida's bad enough where it feels like we're on an island anyway. You know what I mean?
I know. Yeah,
It's
we
like
are.
You're gonna
'cause
go
we're
on
so
the
surrounded.
Yeah. So Hawaii, you're just driving around. It's beautiful there, but I can't imagine just living there. Too.
You know what's funny? I'm like claustrophobic, and I like and I like when I truly think about living on an island, I'm like, ooh, but I can't get off except by boat or plane.
Yeah.
Ooh. I want to be able to jump
like
in my
planes?
car and be able to, and you can't just go like that.
Oh,
you
no,
have to
you
wait
gotta-
for the boat, or you have to wait for the plane. You know what I
Exactly.
mean?
Yeah.
No. So I don't think
And the
I
little
don't think
teeny
I
planes
could.
in between the islands.
I know. So I don't
Yeah.
think I can actually live on an island.
Yeah,
you
you're
know?
like,
too
forget it.
claustrophobic. No, I
Yeah,
got to be able to
John
get.
just-
I have to
he
be
just-
able to get out.
Yeah. And the houses in Hawaii, I mean, they're like, they start at million, although I've seen some on the.
Watch that show. Like any,
Yeah.
dream house or whatever. I
Yeah.
don't even know what it's called, but people who are they have a budget of $5 million
Yeah.
and they're trying to decide between these houses.
I know. I've seen the memes. It's like I maintain butterfly gardens and I have a budget of $5 million.
I know, right? That's what
I'm like, oh, me too. I wish. much, you know?
Yeah. I'm like, what do they do for a living? Nothing.
I know, nothing. Just sit. I always say, like, some of the people, they just sit down, look good. You know what I mean?
I
Like, what do
know.
you do? Nothing.
I know.
I know. We're not gifted like that. They have the shows.
How did we go back to complaining
I
again?
know. Darn it, we're down the rabbit hole. I was like Debbie Downer. Well, that's what I was saying about the news, that people watch the news thinking that Florida is it's just like other states and stuff, and we're not, you know, as you know, Florida man, just put that on. You'll know that Florida's different, you know, or the Miami one. You ever watch that one? Yeah. That's hilarious too. But yeah, so we go
alligators climbing up your, and ringing your doorbell.
Yeah.
Did you see that one? That was like, what?
I seen the one too with the alligator in the back of the car, and it says Florida resident takes a picture of the alligator on the back. It's like the alligator, I guess, is deceased and it's just tied to the back of the car. You seen that one? No. And I was like, hopefully that's photoshopped, you know.
I know.
It's crazy, but yeah. So so if you watch the news and you're getting nervous and you're upset about it, we're in Florida. Things are, you know, different. We're still kicking over. It was always 30 days on the market to 90 days on the market, and now we're just going to go back to normal times, you know?
Yes.
And so I think a lot of people are having a hard time with that, especially, like I was saying, if you're new in the industry.
Right.
And your sellers are, you know, their stuff sitting. They think it's sitting, and you're just like, this is normal days on the market. You know?
Exactly. This is just normal. And that's what I'm trying to tell my clients as well. Same thing, because they're just like, you know, it's been on the market for a week and a half. Do you think something's wrong with it?
Yeah, what's wrong with it?
No.
I know. Well, yeah, exactly. So there's nothing wrong with it now. And when we were talking about the lock and shop, the other one you had on there was that Hometown Heroes. I did a Hometown Hero with the FHA where no one was taking FHA. We actually did have multiple bidders and stuff, but we had this guy who wrote this letter, and you know, and he met with my seller. They ran into each other, and it was him and his wife and his kids, and they couldn't find a place. And the seller was like, "I don't care what their loan is, I'll take it." And I'm like, okay, because no one's taking FHA right now, but that's cool.
And down payment assistance.
And Hometown Heroes. We're going to go for the trifecta. So what they did was FHA came out, and they were very lenient on the property, actually. And usually they're sticklers. You know, she had the top of the house had, you know, where the fascia is, had the screen, and you could see where, you know, squirrel or something.
Yeah, or squirrel.
Let's say squirrels,
rodent.
not rats.
Okay, let's say squirrels.
Rodents had gone in and out or whatever, and they didn't say anything about it. She was, you know, getting it fixed and stuff, and she's like, "Did the FHA appraiser already come out?" And I said, "Yeah," and he didn't know anything about it, but it was like, I think it's because we went against the grain. We were doing FHA. We had Hometown Heroes. We had to appraise it out, you know, like $15,000 more than it was worth. They appraised it out more. They took the Hometown Heroes. They took the condition of the house. The only thing we had to do is throw some heaters in.
Yeah.
Because in Florida, you have to have heaters for your house to sell, which makes no sense at all. But
and I will say, you know, that's kind of a little bit of a myth there with, you know, FHA being like, you know, really strict. They're not. That really is a myth. They're not anymore. They are safety. So if it's a safety issue or something like that, rotting wood, you know, loose railings if you have that, hanging wires,
flooring that's ripped up, you can trip on.
And
stuff like
yes,
that,
they have to have a smoke detector. I just had one that, you know, I thought every house has a smoke detector, but apparently not. This one didn't. And I'm like, really? I didn't know that.
Yeah.
So on FHA, I have to have, hey, if you didn't know that, they have to have a smoke detector.
Yeah, and they're only like $20.
At least one. Yeah, just go put it up, you know. So, but anyway, but they're not as hard anymore as they used to be. So don't fret. Tell your sellers, don't fret about that. They really are not that hard. You know, again, safety issues and everything. You know how to go through. Peeling paint. If it's peeling, they're just, you know, that's a health. It's a health thing. Well, because kids used to go and eat it, you know, if they have small children.
And if you're buying a house less than 1978, you're going to have a lead-based paint.
There you go.
And the reason is because of that. And when you explain that to people, it's so hilarious to me. Like, and one of my customers said it the other day. She's like, "There's so much paint on this wall. There's no way kids are sitting and eating paint off this wall." And I thought that was funny because it was like, literally what we all visualize, that lead-based paint. You know what I mean?
I know.
And you figure 1978, it's 2022. How many years of paint has, you know what I mean? The chances of your lead-based paint eating it
buried
off the
so
wall.
far down.
Yeah.
But that's the other thing. And it doesn't even have to be edible, because I had a friend this happened to up north, because it was big. You know, all the houses up there are like, what, 1800s, right? So a
Right.
lot of them are. So yeah, it had lead-based paint in it. And their young daughter got sick. She didn't eat anything just from
Oh, that's the fumes?
yes.
Oh,
just from
wow.
it, like,
I've never heard of that.
they were living in the house for like 4 years, 5 years, something
wow.
like that. And
It
yeah, and
must
that's
have
what
been
they kind of
open.
traced it back
That's what
to.
I say if you, well, I mean, and I'm not a, scientist, obviously. I play one as a realtor.
I just play one on TV.
But yeah, so if the amount of paint that's covered. So literally it's like the flooring too. If you have the stuff coming, like the smell of, and that sounds bad, but the smell of urine, and they can't get the floors up, they'll paint, they'll say to paint with Kills, seal the whole floor, and then, you paint it, and then you go over it, and it's sealed in the floor. But that's cement though. So with the paint, they would always say just repaint, till it's covered, so you don't have open. But I guess if you have a really old home, you could have open, like even cracks where it could be coming through,
Right, yeah.
Florida,
Yep.
we usually cement block, the older plaster walls, too.
Right, right.
But, you just keep sealing it in and stuff like that.
Keep painting and painting and
Yeah.
painting, and your square footage for your bedroom is
Yeah.
getting smaller and smaller.
I
'cause
don't remember
your
this being
paint.
that small. Yeah, I didn't think of that.
This used to fit.
Yeah, that's terrible. That's funny. So Hometown Heroes, and then we got so they're getting money. Which Hometown Heroes? We were talking about this too in the break. What's a hometown hero? And the gentleman that I had who was purchasing, he was a ex-military. He was
Okay. Yep.
yeah. I want to say he was.
But it's not just military,
Right.
and that's what we wanted to let people know. And by the way, most of your lenders will do that. Your local lenders. That is one of the things. It's a state program. It is a down payment assistance program. Some people think, oh, I get $25,000. No, you don't just get $25,000 unless you're buying a $500,000 house.
Yeah.
It is 5% of the purchase price,
Right.
up to
That's what,
$25,000. So be careful with that.
So he got 15, and then they praise it on top of
There you go.
So if you're already upside down on the appraisal, Hometown Heroes probably won't work. So like you say, it's we were saying 300, so it's 300, but this house is probably worth 275. We
Right.
know we're probably overpriced because all these other sales are going down and down. You're probably not going to help the Hometown Hero then, because they have to
Right.
appraise it out for that 15 grand or whatever,
Right.
So on top
And
of it.
keep in mind, your hometown heroes out there, it is no longer just our first responders, because there was a program, they called it Sailors and, I don't know, Salutes and Sailors or something like that. I can't remember. So it's not just military anymore, and it's not just like your EMTs and firefighters and police officers. It is teachers, and
Yeah.
they've really added to the list, and your doctors and your nurses. Your nurses never used to be included in that, and your
like first responders,
social
thing, right?
social workers.
Yeah.
Exactly.
So,
there's all
'cause it
kinds of
said-
things. There's over 50 occupations. So please, 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 please
It didn't, 'cause it
see
didn't
if
say
you're
teachers.
qualified.
It said child care workers.
Yes.
Which is like a, you know what I mean? That
Daycare.
opens- yeah. So if you're in a
Daycare. So if you work at a
yeah.
daycare,
Yeah.
So definitely contact a lender.
Contact DeLynn.
Contact me. We
A
can give you
lender.
the list. We can see if you're on there, and
Yeah.
potentially you can qualify for the Hometown Heroes program. People right away think, oh, it's a hero, it's a soldier, or it's an EMT,
Yeah.
or something like that. No,
Yeah, I was impressed. It actually worked really well.
It's a huge list right now. Yeah.
Yeah, and they have funds available. The Florida State Bond, I haven't seen that in a long
I
time.
know, right?
Gosh.
So
They're
Hometown
back.
Heroes is through the state of Florida, and the bond program is still out there. And I'm just telling people, you know what? It is still out there. So if you don't fall in the Hometown Hero program, you can still get down payment assistance through the state, and sometimes through the whatever county you're buying in.
Yeah.
Certain, counties in our area, Pasco County has a program, Hillsborough County has a program, although I understand that one's a little challenging. But there's definitely county programs and state programs, the bond program, that is still viable options out there for down payments.
Yeah, because on the down payment assistance, like I think Pasco County, it was one of those things of the money. So you would do the program, and then there was no money left, so you'd have to wait.
Exactly.
So you do that program.
Pasco has plenty of money right now.
Yeah. So
Again, because I think for the last couple of years, nobody was,
used it.
no
Down
sellers
payment,
were
what?
accepting.
Yeah, I
down
know.
payment assistance program. So
Exactly.
yeah, so they got plenty of money.
Yeah. So with these programs, don't go find a house and then say, I want to do it. Go do the program and get all the paperwork and then find your house after.
Yes,
Because
and
otherwise,
talk to us first because
Yeah.
there's definitely certain quirks
Yeah.
that have to happen with it. With the county program, they've got additional overlays like they won't do flood zones, they won't do repaired sinkhole homes, things like that.
Right.
So with the county program, there's a couple of quirky things, and with the state program, there's a couple of quirky things. So talk to a lender.
Yeah.
Here. And we can make sure that we line you up with the right program.
Figure it out. Okay.
And
then
save money because
Yeah.
whatever down payment assistance program, it is not going to cover everything for you.
Yeah.
I'm telling you that right now. With prices where they are, it is not, you're going to need somewhere between, even at a minimum, $15,000
Yeah.
or more. And sometimes the programs only give you $5,000. Some of the programs only give you $10,000. Some of the programs do give you $15,000. So
Yeah.
save money. Just
Yeah.
don't think
So-
that you're going to walk in and get everything.
So my theory on this is like, I don't know if you remember this because you've been doing this a long time, but in January, we had a lot of people wanting, traditionally in years past, because they would get their tax returns and then we'd say, we would wait. We would be
Yep.
like, get your down payment
Yep.
program all set up. And then we'd wait for that tax return. Bam, January, we were all out like crazy. All realtors, mortgage people,
Yep.
everybody's between January and March, we're selling the most houses we can
Right.
packed in because everybody got their tax returns.
refunds.
Yeah. So now it's back to that. So everybody save your tax return.
That's right.
Do
That's
these
right.
classes ahead of time. Talk to DeLynn and get, pre-qualified. Because as you guys are doing all this stuff, the interest rates are creeping up. So
Yes,
your
they are.
approval is going down,
Yeah.
Don't get me started on that. So
I know.
we had doctor loans, which I always get a kick out of this. That, that if you're a doctor, we love you, but you don't have to pay any. It's like 100%. You don't have to come up with anything at all because you're a doctor. I mean, you deserve it after all that schooling.
I know.
Yeah. and all your schooling is not held against you and stuff. That's
I know.
kind of amazing,
That's the nice thing about the
Yeah.
doctor program. So the doctor program, and it is very specific, only for certain doctors, like veterinarian is in there, ophthalmologist, optometrist, medical doctor. So, but talk to someone. But anyway, so there's a doctor program out there because doctors, one of the hardest things they have is mountains of student loans, right?
Yeah.
I mean, $200,000-$300,000
Yeah,
in
it's
student
crazy.
loans. I mean, it just like makes me. But
Yeah.
anyway, who can how are you going to make a payment on that, right? It's
Yeah.
just crazy. So on the doctor loan, it's 100. You're making these student loan payments, and how can you save for especially if you're a young doc just starting out, it's going
Yeah.
to take you a while to get up to where you're making a good chunk of income. Anyway, so it's 100% financing, so you don't have to put a down payment down. These are the really cool things about it. The next really cool thing is we do not count the student loan debt against you.
That's
Normally
awesome.
that's counted into your debt ratio, and that's going to kill what you qualify for, but we don't count that on the doctor loans, which is awesome. And then the third really cool thing is no PMI.
Oh, that's good.
Yeah, no PMI, which anytime you put less than 20% down, you might have heard this if you're in the housing market, anytime you put less than 20% down, lenders have what's called PMI, private mortgage insurance. They're going to charge that mortgage insurance, and it's based on how much the down payment is, until you reach a certain point of down payment.
Yeah, no kidding.
So there is none of that with the doctor loan. So
That's
those are
good.
three really cool things about
That
it.
is cool.
But like I said, they're very specific on which doctors.
And that the other program, the ribbon program, we'll take a quick break and we'll talk about the ribbon program because this one's really good. If there is a bidding
Yes.
war, this is a good thing. So you guys sit tight. We're going to talk about ribbon program and we'll be right back. Hey guys, welcome back. We're going to talk about the ribbon program, but before we do, which is a fantastic program, we're going to show a couple of listings that are still available. There was a condo, I already got that under contract, but we still have 12507 Stagecoach. It's in Beacon Woods. You have to own it 2 years prior if you're going to rent it out, but this one's $359. It's a 4-bedroom, 3-bath. It's over 2,000 square foot. It's a real nice, beautiful kitchen. Has the subway tile, backsplash, Lazy Susan, microwaves, silver or stainless. The flooring, got the laminate flooring. It just flows like
Beautiful.
crazy. It's really nice.
Beautiful.
It's got a really nice fireplace. It's wood burning. Someone asked me that on the last
I love
show.
that dining room. It had on the wall
They have all the
Trim. What do you
wide
call that?
baseboard too.
Nice.
The upgraded, you can't see
Beautiful.
it. See how it's the larger and the what's it called, wainscot or whatever it's called.
Yes.
The floor. The wall. And then they have the brick when you first go in. This is the second living room here. Oh, that was a bedroom. That's a master bedroom. Upgraded
a second
tiles.
living room? There's a second living room?
Yeah, it's like 2. So you have one here.
Oh,
with the-
nice. Look at
Isn't
that. I
pretty?
love that. Yes,
And
yes.
you know what I love about this house? It sounds crazy, but I love those stairs. Those stairs are awesome because stairs were out so in a lot of houses they put carpet.
Yep.
But these stairs, I was like, I got to take an extra picture of those. They turned out so good. Yeah, everything in here, they just did a beautiful job. It's huge. So you've got huge closets and stuff too. Really nice bathrooms, just upgraded everywhere. And there's one other bathroom too. It's very nice, but you got. Let's see, is this it? No, it's the same one. That's it. That's the one. That's upstairs bathroom.
That's beautiful.
Isn't that nice?
Yeah.
And there's another picture of it too. But all the bedrooms are good size. If you have about, literally, if you have 4 kids, you could fit in this house comfortably. 5 kids, maybe 6.
Wow, that's
Yeah,
nice.
isn't that nice?
How many square feet is this? 2,000.
2,050.
Wow, but it's so spacious. It
Yeah.
looks bigger than that. Wow.
Yeah, it is on the layout's really nice. It's really, really nice, huge. So you got your community centers, community pool. It's close to golfing.
Is it fenced?
Tennis. It is on both, I think on the sides, not across the front though. But
Right. But it looked like it had it going to the
Yeah,
side. So
the
your
back-
back is
the back
which
has
is
a fence.
nice because Beacon Woods is a little, but that's already fenced. So that's
Yeah.
fantastic. If you have a dog or whatever,
Yeah,
that's awesome.
exactly.
Ooh, that's beautiful. That's
Yeah,
front
the
doors.
doors. Yeah, they're
That's
nice.
gorgeous. I love that.
Yeah, and then we have the other one. It's at 13007 Club Drive. That one's in Beacon Woods too. I've been in Beacon Woods a lot lately. This one's on the golf course, as you can see. There's a little red umbrella. Looks like a little pinpoint on it, but this is the outside. Has good curb appeal, just like the other one. It's all been redone again, so we have almost the same coloring in this. Almost looks like the same house. This flooring though is tile. The other flooring is vinyl. So this is ceramic tile.
Oh, that's tile. Wow,
Yeah.
look at that.
Yeah, it's really pretty.
Very
all the new
nice. And it
fixtures.
looks like, the wood. I like that when
Yeah,
they do
isn't
the
that
tile
pretty?
that looks like yeah.
And then that one has the kitchen very similar as the other one with the granite across big. This one has a big
look
island.
Holy cow, look at the size of that island. That is a big piece of granite.
And it's good for a backsplash.
And
You're going to
they got
lay
the-
up on the
I
island.
love it. They got the chairs
I was
around
just
it.
talking about the lay.
Yeah.
So people have been known to lay on the island and take pictures of like their
Yes,
backsplash.
someone's daughter.
Not my kids.
Selfies to take
Not my
selfies.
kids. Yeah, and that barn door was the 3rd bedroom or the 2nd living room,
That
depending
barn
on
door,
if you
that's
need.
very pretty.
Yeah, if you needed that.
Yeah.
But so they have all that private trees right there. They're on the golf course, but they are still private. So you could either trim that up if you want a better view of the golf course, or you can keep it for privacy. It has a big back porch on it as well too, which isn't really in.
And
the
this is a
pictures, but-
3-2. That one's a 3-2.
Yeah,
you said?
3-2.
And the golf course. And
That one's $319 on the golf course.
are the HOA fees more when you're on the golf course than when you're
No,
not?
I
don't-
believe they're
I don't
exactly
know.
the same,
Because
yeah.
they're very low. In
reasonable.
Beacon Woods, they're very low.
And they call it like a hidden gem for the golfing community. 'cause a lot of them,
I
a lot of people-
love Beacon Woods.
Yeah,
Yep.
it's nice. They keep it very nice and stuff too. There's no like as you drive through, you don't really see. It sounds bad, but rundown properties. Everybody keeps them very
Yes,
nice.
yes.
For older, 1980s community.
Yep.
It's
And again,
good.
you have to live in it for 2 years before you can
rent it. Both of them. Yeah.
Yep.
Yeah, so it is deed restricted and stuff. So we were talking about the ribbon program, and I was all excited.
Yes, yes.
And we had talked about it. I don't know if you remember, but we did talk about the ribbon program on here, and you introduced it, I want to say
Okay.
like 4 months ago or
Yeah.
something. We talked about it, and I got to do one the other day, which it didn't go all the way through, but I got to see how quick
how
and
it
everything
works.
was. Yeah.
Yeah, right? And
Yeah.
they do right away. They'll let you know how high you can go. So the ribbon program. So yeah,
Yeah,
let's,
so
it would have been great. Like everybody would say, my realtors would say to me, oh, where were you a year ago?
Yeah.
Right? Because
Yeah.
when there's a bidding war going on, and again, even in the houses that are priced right, you might still run into bidding wars here and there, or, especially like I said, when they're priced right, people are starting to come back into the market and such. So you do want to put your best foot forward. Well, what Ribbon does is Ribbon allows you to go in as a cash buyer, even if you're getting financing. So let's say you've come to me and I've pre-approved you for, a certain amount, and Jessie shows you one of these beautiful houses, and you say, yes, this is the house that I want to put an offer in on. Well, the first thing we do is we put the address into the Ribbon system, and it's going to come back, and it's going to say to us, let's just say the house is $350. That's what the asking price is. Ribbon is going to say, okay, so Ribbon will guarantee you up to $350, or if you feel you have to bid over, it will actually go up to $375, and that's their max. So if you have to go higher, they're still going to cover you. So how it works and how it goes in as a cash buyer is Jessie will write up the contract and check off cash on the contract. There's an addendum that goes with it that explains it to the seller. This is a win-win. And if you're, listing out there, if you're a listing agent out there, and you have a ribbon offer comes through, take it. It is a guarantee, because the other thing it protects you from is if the appraisal comes in short, Ribbon is going to pay it up to that amount. So there is no shortage. The buyer doesn't have to pay the appraisal shortage. The seller doesn't have to lower his price. Ribbon is going to pay
Cover
the
it,
difference,
yeah.
cover the difference. So it's a win-win for you listing agents out there. If you have a Ribbon offer, and I know some people said, oh, I didn't understand it, so I didn't accept that offer.
I had the Ribbon lady call for my buyer, and she called. She was great. She called.
She's very good. Yeah,
and
Wendy.
She goes, well, try to get it back to you as soon as possible. So she could have gone up to, the house was like $315. We're putting a cash offer in. Then Ribbon puts it in their little computerized system and says, we'll cover you up to $306. Yeah. So then my customer says, well, I'll bid up to $303. And I'm like, Ribbon said, but it was hard for her to grasp it too, because she's used to a conventional loan, not like an actual, just a normal loan.
I know.
So
it is hard for people to grasp. It definitely is. Yeah.
I'm like, they'll cover you. But basically at the end of the day, I think if you just say, well, it's going to cost you a 1%, but you're going to get a better price. You're not going to have to overbid on like now.
Right.
So at 306, if she would have got it, or
would have cost her $3,060.
Yeah, so she still would have.
And it protects her from an appraisal shortage.
Right.
So you as you don't have to worry about an appraisal gap anymore.
Right. That's what I told the listing agent. I said, well, we're covered, because as soon as they've already put it up to a certain point, which I didn't tell her at a certain point, because I thought my customer was going to go up to that certain point, but she got kind of cold feet, and she was like, I don't know what to do. I'll just go 303. I think she thought, if I get it, it's meant to be, people are, if I get it, it's meant to be. But I'm like, if you want it, let's bid 315. You know what I mean? You pay over the 306 from them, the 9,000, which you have to pay, I think, right up front. I got my 101.
Yes, you do have to pay that right up front, and that's why. So here's how the Ribbon works. Like I said, so you do you're right away. You go in as a cash offer, and we're processing the file, okay? We're processing the file. When it gets to the closing table, as long as everything went fine, the seller's not going to care if the money is coming from cash from you, or if it's coming from cash. He didn't care. He's getting his money at the closing table, So we do the loan and everything else. But let's say something goes sideways, and we've had this happen too. A guy right before closing lost his job. He got laid off. Obviously can't close, so Ribbon steps in and pays cash for that house and will rent it back to the buyer.
Yeah, that's
so
awesome.
Ribbon owns the house, okay, and they will step in, pay cash for the house, and then they're going to rent it to the buyer for up to 6 months, so that we can fix whatever went sideways, whether it was they lost their job, they went and bought a sit-down lawnmower that they shouldn't have done, I go and sell that sucker, something like that. Whatever went sideways, we have 6 months to fix it. it.
Yeah.
And then Ribbon will sell them the house back. So, but they're living in it at that time, so it's perfect,
Yeah.
you know, especially for people who are like selling a house up north and coming down, you know, that kind of a thing. The only thing you have to be careful with is any kind of subdivisions like Beacon Woods can't do the Ribbon program because if Ribbon
The
has to
owner-
step
yeah,
in and rent it
out.
back, right?
Yeah.
Because they have that 2-year.
Yeah.
So you
yeah,
just have to be
exactly.
careful with things like that. And
Yeah.
Ribbon, that's one of the reasons we put the address in there, so they'll let us know.
Yeah, yeah,
You know,
true.
if it's,
Yeah, so that specific property wasn't in Beacon Woods, but what I liked about it was they knew, so you knew you were safe with the appraisal too, because I had pulled the comps and I
Yes.
said, I think we're good. I think, you know, I told the selling agent too, I think you priced it right. I think you're right in there. I don't think there should be an appraisal gap or anything like that. And then when it came back at 306, I was like, oh, okay, that's, you know, it was
There
good
you
because
go.
it within, I would say, because we had a bid deadline, believe it or not, this is last week, and everybody's like, there's no more bidding wars. There's no bid. I'm like, we're bidding against 3 offers. We have cash,
See?
and we still lost. You know,
Yep.
but again, my buyer wouldn't go over the asking price. She wanted to go under because she's watched. You know, we're watching the news, and they give great advice, but it doesn't matter. Like, you know, I was saying, it doesn't necessarily mean that Florida is following the trends.
Yeah.
There's still bidding wars on some properties if they're desirable. You know.
I just had a realtor yesterday tell me on a manufactured home, no less, for $250,000, she has 5 offers on it.
Oh wow, yeah. That's,
5 offers.
yeah.
And it's a manufactured home.
You're like, hello, you guys know. Yeah.
So yeah, if it's priced right.
Yeah,
Because
price-
this it's gorgeous, and you know, and there's a, you know, like a beautiful
All the acreage too, right?
yeah, and covered patio out the back,
nice.
and horse stalls,
Oh,
and
nice,
it's
yeah.
a beautiful piece of property.
Yeah,
I
it's
want
one
to
of
say
those, it's
Brooksville or something
price,
like that.
Price or location. I was always taught, you know, if you have the location, you can put your price, and if you don't, then your price, you know, is what's going to lead, you know.
Yeah.
So if you have like we were talking about this too, if you have a cookie cutter neighborhood and their house is like 550 and yours is 575 and they're exactly alike, then you should probably think about, because you're literally competing the prices. They're going to look at both the prices, houses, then they're going to look at yours and like, what is 25,000 more? If you have a pool, then you justified it. But if they're exactly the same and this one's 550, you know, and yours is 575, then you need to do the math and figure out why you guys have
Exactly.
that gap on
Yep.
it. You know, are they?
Yep.
Does it say super motivated, needs work? If they're
Right.
exactly all redone, all this. you
Because
know.
that's what the appraisers are looking at.
Yeah,
They don't
exactly.
go into the houses, so that's why it helps to have,
Yeah.
you know,
Yeah, it does.
yeah.
True. But yeah, it's interesting. So the Ribbon program, and so now bank statement loans, I haven't heard about those in quite a while either.
I know. So those are still out there too. Again, just something I wanted to mention to
Yeah.
people. So sometimes people, for whatever reason, don't fit into the normal, what you've heard as called conventional. Fannie Mae, Freddie Mac, that is conventional, or FHA or VA, something like that. Sometimes they don't fit into that perfect little box. Maybe they're self-employed and they
I was
don't
gonna say
show all of the
self-employed.
income,
Yeah.
on their tax returns, or they're allowed to write off a bunch of stuff, so we don't show. But they really do make a lot of money. So there's alternative programs, and one of them is called a bank statement program, where we're going to look at either 12, depending upon what we're doing, 12 months or 24 months of the business bank statements or the personal bank statements, you know, depending upon what type of self-employed. This is good for like hairdressers, for
Yeah,
example, you
yeah.
know, because they make, you know, a lot of tips and stuff like that. So anyway, so we're going to look at all of that, and we're going to add up all of the deposits over the last 12 months or 24 months, whatever we're doing. We'll see the expenses right there. Like if they have, you know, like say it is a hairdresser or whatever, and she has her chair, right? They rent the chair is what they
Right.
do at a salon or whatever, and she buys her own supplies, her shampoos, and you know, things like that. So we're going to deduct the expenses and things like that. So we're going to do it that way.
A
Now,
little profit and loss
Are
sheet
you-
with their income.
exactly. So we're going to work those figures up, and that's what we're going to use instead of tax returns. Those are a little riskier loans, so the alternative investors do charge more for those.
Yeah,
So your
interest-
interest rates are going to be a little bit higher, and your down payment requirements are going to be a little bit higher.
I had one the other day, and I called actually your office, and I was like, I need a hard money lender, you know, and So I was talking, so then
Let's talk to Barry.
Yeah, of course. So I talked to Barry because I knew you were going to be like, call Barry.
Well,
so
No.
No, okay.
Oh, yeah. I was out on Friday.
Okay.
That's what I told you. Yeah.
So I called him and asked him and stuff, and so he told me, you know, the interest rates, they're, you know, between 8-10%, and I
hard
didn't
money
think
people,
yeah, and I honestly didn't think it was that bad, because I mean,
Yeah.
10% 10 years ago was just the normal. That was
It
good
was.
price.
You're
You know, if
you're
you got
absolutely
10%,
right.
That was
Yep.
good. So and so I told my buyer, and now not knowing the interest rates are probably going to be like 6% by the time this video comes out. So 6 to, and the hard money lenders 8%.
8 to 10, yeah.
Yeah, I was like, it's not that, you know what I mean?
Right,
It doesn't seem
right.
that much, so you can get that house and before, you know.
And a
so-
lot of times on those, it's interest only.
Yeah.
Because it's a kind of a short-term loan.
Yeah,
They
yeah,
kind
like
of
a
only want a little
balloon.
thing. Yeah,
Yeah.
exactly. So it's interest only. So, you know, your payment is definitely going to be lower than, you know.
Yeah, rent or whatever.
A 30-year amortized payment, you know.
Yeah, so I told her to reach back out to him directly and see,
Yeah.
you know, 'cause I said, well, if you don't want to go 10, maybe he'll go, maybe you can negotiate nine, you know, but I'm not into
Right.
to negotiating
Right.
loans, especially when it gets like not, like this is
Yeah.
all black and white to me,
Right,
you know what I mean?
right.
Whereas when a hard money lenders, I'm like, okay, but and you
Because
figure,
those are, they're different from,
Yeah.
you know,
and
night and day.
You're always like envisioning like some type of like mafia movie with the hard money lender, you know what I mean, in my head. But of
Yeah.
course, you know, Barry would not fit into that category, of course, but it's just funny how I picture them. But it's funny to see people actually back with the hard money lenders and stuff too, you know. So it's switched
I've
up
never
quite a
liked
bit.
calling them hard money lenders because it does sound mafioso. I
What do you
like
call it?
Private lenders.
Private lender. Okay.
Private lenders.
Okay.
Private loans, private lenders. That's what I
Okay.
call it.
All right. So maybe I'll try that. Yeah, I think it sounds softer.
Exactly. See, that doesn't sound so
Yeah, it
bad,
doesn't
right?
sound
Yeah.
bad. Private lender. I'm a private realtor with the private money.
And I have several private,
Oh, okay.
you know, private
Are they
lenders out
around
there.
I know we're about to wrap this up, but are they around the same interest rate?
Yeah, him and I
Okay.
have the same ones.
Oh, okay, good.
Yep,
Okay.
yep.
Well, I'll reach out to you, and maybe you could reach out to my customer. In fact, I
Yeah.
think you might know my customer already. So
Okay.
when we get off this, I'll let you know. But I just want to thank everybody for watching today. Hope you guys learned something. I know I did. Everybody have a great, blessed week, and we will talk soon.